Ericsson. So we'll start out with the as is. So I did the analysis a little bit earlier today, back in the 11 a.m. section. Company share price for Ericsson was trading at about 57.10 krona. I don't know where it is right now. And right now they're at 57.20, so somewhere around there. So that was the share price. Next, we needed their WACC. Okay, very important. Common mistake we can make. I did it earlier this semester. Someone was doing it earlier this morning. Make sure you don't do the ADR for these international companies. Okay, because if you had done it in U.S. dollars, then you'd have dollars, but that WACC is actually a European WACC. Specifically, it's a Swedish WACC. So therefore, your discounts wouldn't be matched up. So make sure you do the Stockholm, the SS equity for Ericsson. So again, that would be the WACC 77. That would be the shares outstanding, 3 billion and change. That was the current share price. This came from the EEO this morning for the estimated sales and EBITDA. This was the trading multiple. They were trading at 75 cents of EV to sales and 968 for EV to EBIT, which estimated a margin of 0.077. Okay? So over here in the ratios, a couple things. One, tax rate. So we went through the event section earlier today, and again, I can search, but nonetheless, we couldn't find any guidance on the tax rate in the company press releases. The one thing we did see is that there was a comment that basically said our cash tax rate and our effective tax rate are probably similar over a long period of time because we do business in over 100 plus countries. So that was the one comment. So without further data, I will say that 52.9 and 41.7 look like outliers. I don't think anybody pays a 53 tax rate, even French companies. So basically, if you throw those out, the other 4 years at least look pretty consistent. And this, when we did Nokia, even though they're not quite the same, but basically they were around 32.5 for their tax rate. So I think 30 seemed to make sense as a starting point. So I use 30 for the tax rate. So given that, the other thing was based on the EV to sales and EV to EBIT. That gave me an estimated margin of 7.7, which was very close to the 2018 analyst consensus of 7.6. So it was 10 basis point difference. So I moved the EBITDA margin from 11.6 to 11.7. And since it was 10 basis points, I don't think it really matters what year you did it, but I think a pretty consistent margin over the next few years. Now, given that, even without growth, I went over here to the EPEOY just to look at what's going on with their expected ROIC. And the thing is, the next 2 years, their ROIC is expected to improve as their margins improve. That's the consensus estimate. And then it gets closer to 10% in our model. So I think that a realistic go-forward ROIC for Ericsson is probably closer to 10%. Plus or minus, you might have used 9, 10, 11, but somewhere in that range on a go-forward basis. And again, you don't just plug and chug. So it's not like you just put the numbers in and look at 2018. We're trying to look at what is a long-term ROIC for this company that the market's using. And I think it's probably closer to 10. So I put in 10. So that would help us when we tried to get a G. So the 10% estimated ROIC, backing into a G that gets us close to the share price. I got a G of about 1.8. Okay, so just checking. Did everybody get G's close to 1.8? Or a little below 2? Okay, for those of you who didn't, where did you end up with?
I did, but how did you get that? How did you know I didn't use G?
I got the G because I solved the G that explained a 10% margin. Okay. So my guess is, what margin did you use? Or sorry, the estimated ROIC. What ROIC did you use?
I just put it to 10%, but G didn't change. I mean, the G's not linked to anything.
No, the G's not linked to anything. The G is something you input, that's why it's yellow, and then it'll change the estimated EV to EBIT. So I was trying to get the 9.68 matched.
Okay.
Okay. So I then put this G here to use that as about a 1.8 G for the model. And basically with no growth, which is where they are in 2018, that got very, very close to the share price. So I think I'm kind of close to the as is. So I think here's what I know now about Ericsson's share price, which is assuming about a 30% tax rate and using the trading multiples, the market's expecting a G a little less 2% long term. But more importantly, at these margins and the share price, the market's not really expecting a lot of growth in the next 6 years. They went from negative to 0.4 to somewhere, 0, 1, negative 1, somewhere in that range. And you could obviously change it a little bit, but they're really not looking at a lot of growth. So that's what I kind of learned by doing the as is. Hopefully we all got similar numbers. All right, so here's my first question. So on Monday, we had a team do enhanced EIC, which I basically, made them stay up in front of the room for a long period of time while I really pushed them. And I appreciate that they're willing to do this. I did that with all the sections, so I didn't single you guys out. But we heard a lot about this industry, and we heard about the growth of 5G. So wasn't one of the strong assumptions that we made that 5G is on the horizon, everybody's going to do an upgrade cycle? And the team that talked about enhanced EIC said Ericsson's one of the companies, along with Nokia, that sells the back-end stuff for 5G. And that's a really big opportunity, right? Did I hear that right on Monday? Just clarifying. So, zero growth for 5 years. What goes on? How do we explain this in the as is if we said 5G is on the horizon, everybody's about to upgrade, and their customers are the carriers? So how do we reconcile that? I'm not saying the as is wrong. I'm saying this is what the buy-siders that are pricing Ericsson are currently pricing Ericsson in today. They're basically pricing them as a very low growth, low margin firm on a go-forward basis. That's their stock price today. So, but we just said 5G is a big growth opportunity for this industry. So how do we reconcile that? What's going on? Yeah.
Because of like 4.5G that we were talking about yesterday, and then also for this company, for Ericsson, the wireless is like 75% of sales compared to Nokia, which is only like 60%.
Okay. So Ericsson does have, you said 75% of their exposure is wireless equipment, but 5G is all about wireless. So I do think it goes back to 4.5G, and what we would now talk about are bull and a bear. Okay, so let's try and interpret what I would consider conflicting signals are telling us. And here's what I mean by conflicting signals. The people that did the industry analysis said we're primed for a next major generation, and this company has a high beta, which means it's a cyclical business. It's a boom and bust cycle, and we're supposed to go through a boom cycle. Yet the market's not predicting a boom cycle when you actually look at what's going on with their share price. So again, posit. One of the things that could be going on is maybe the market doesn't think that 5G is going to be adapted as quickly as we think. And there's going to be a lot of competition now amongst these carriers, not just Nokia, but Huawei and others that are basically making it tougher pricing for this. And it's going to be a much longer upgrade cycle. Okay, so here's the idea. Your cell phone today. Your cell phone today in the next 3 to 6 months in the U.S. is probably when the next iPhone comes out and the Samsung Galaxy 8, which just came out, basically can handle double to triple the speeds of what you're actually getting out of the phone today. Okay, and that's what we mean by 4.5G, is the carriers can actually take the existing cell phone technology and basically double or triple the speeds on your cell phone. And to you and me, that's going to seem like a pretty good speed bump. All right? So I don't have to go to 5G to give you that speed bump. 5G is going to require a lot more expensive hardware investments. And so if we start thinking about the bear scenario, not only for Nokia, but also we're now seeing for Ericsson, and I think this is what's being priced into their share price today, is that it's not going to be as quick an adoption to 5G because the carriers could quickly extend their 4G investments. And so therefore, 5G is coming, but it may not come as quickly as people are saying, 2019-20 on a mass basis. Right? And that's what is potentially depressing the stock prices for Ericsson and to some degree Nokia, because there's not a lot of growth there in these marketplaces. Right? And that's what we're seeing in our valuations. So to some degree, and this is the key to the bull and the bear, and whether or not you think it's a good time or bad time to buy Ericsson, is Ericsson's being priced as if there's not a big 5G upgrade cycle that they're going to take advantage of. Right? And what we heard in the EIC on Monday, and somebody just said now, is that basically Ericsson is even more tied than Nokia to what these carriers do in the upgrade cycle. And they're not being priced as if they're going to take advantage of that. So again, this is going to be one of the catalysts. Now, by the way, here's what's going to completely confuse everybody in the United States. When the iPhone 8, whatever they call it, comes out in a few months, AT&T is going to have an icon on that phone. And what I've heard, the rumors are that they're going to actually say 5G on your AT&T iPhone 8. Because your speed on your cell phone, the AT&T network, and Verizon's going to have the same thing, is going to be about double to triple what it is today. And they're going to call this 5G. But it's not actually 5G, it's 4.5G. Okay? But that's what I mean by confusing, is the carriers are going to tell you that you're on 5G and tell you the wonderful things you could do with the faster speeds. But it's actually not technically 5G because the 5G standard hasn't officially been ratified yet, and everybody's still working on the standards. So that's the other thing, is that the carriers are going to do a quote-unquote upgrade without doing an upgrade. And I don't think that this is really benefiting these companies as much as it could. And I think that's the way it's playing out. And so therefore, maybe from the carrier standpoint, it's a couple of years before I really need to go to 5G, which is taking your current speed and multiplying it by a factor of 10. Okay? And that is going to be transformative. But these companies are not priced as if that transformation is going to happen in the very near future. Does everybody see how I'm drawing these conclusions? Because I think this is where, even when we do an EIC, we have to reconcile that. Okay? Because we'll go out there, we'll do our 5 forces, we'll talk about all these wonderful things, but then you do the as is, and you're like, this doesn't make sense. Because if they're having all these wonderful things, and it's not just Ericsson, because Nokia, when we did the Nokia valuation, we saw the exact same thing. Like if you did your as is for Nokia, all right, you came up with, here's the Nokia solution, which I know we didn't go over on Monday, but basically you should have come up with growth rates about 1% for Nokia as well. So it's not like Ericsson is singled out and it's like they're not buying it. Neither Ericsson nor Nokia are expected to benefit in the next few years from this. Matter of fact, again, if I try and weave my story here, I think there's something else at work. And we actually saw it yesterday in an article on Bloomberg. Okay, so we're going to play a little game of Jeopardy. I'm going to give you the answer. You tell me what the question is. The answer is Lowell McAdam. You guys watch Jeopardy, right?
Is that the Verizon CEO?
He is the Verizon CEO. Congratulations for 200. For 400, what did Lowell McAdam say yesterday in the press that sent 4 stock prices way up? I'm sorry? Open to M&A talks. Congratulations, you win $400. I'm not going to actually pay you. Theoretical $400. So here's the article. Basically, he went out and said publicly, think about this, the Verizon CEO, I wouldn't mind if Comcast bought me. I'd be okay working for Brian Roberts, CEO of Comcast, if they bought Verizon. And if Brian Roberts doesn't want to buy me, I'd be okay if Iger at Disney bought me. And if Iger and Comcast don't want to buy me, I'd be okay working with CBS to create some kind of venture between the two of us. I'd be open to any of those 3. So Verizon yesterday just put themselves on the block. And instead of being the acquisition, like we want to go buy, he basically said, come buy me. Now that, to me, you don't rarely see a CEO of a company of the size of Verizon that says we're for sale, right? And I think strategically, Verizon realized they made a mistake, right? Mistake number 1 is they bought Yahoo, right? And they're probably going to realize they didn't get what they thought out of Yahoo. Yahoo's not a transformative acquisition. Matter of fact, I think it was a strategic mistake. So basically, if you really look at it, what's been going on in the industry, now we're moving one industry down. Okay, so what's been happening with Comcast? What's been happening with AT&T? What have they been doing? Who did AT&T buy? Recently, big deals. Time Warner and DirecTV. Okay? Comcast. What does Comcast own besides an ISP? NBC Universal. They own Universal Studios. They own Despicable Me franchise, the Minions. They're going to come out with Jurassic World 2. They own Jurassic World franchise. You know, they basically own a movie studio, production studio, digital assets, content creation. CBS, content creation. CBS, Disney, Comcast, all content creators. What did AT&T do? AT&T bought content. So think about how the industry is changing. And I'll give you one other key data point. Big change between the Obama administration and Trump administration. Okay, FCC. FCC under Obama basically said, we're going to treat all content that goes through networks the same. You can't prioritize somebody else's data over your own data. Everybody's data has to be treated the same that goes through your network. Under Trump, first thing the FCC, what the new administrators did, is they said, we're repealing that rule, and if you want to favor your own data over somebody else's data, go ahead. Now, that was lobbied for by these companies, right? So think about this. I want to stream on my AT&T cell phone Netflix. Well, guess what, Netflix? If you want to have good streaming quality on an AT&T cell phone, pay up. Or good luck trying to get people to watch that pixelated video when I will send Game of Thrones, which I now control through Time Warner, through my own network on DirecTV to that cell phone at higher priority, and you'll get that instantaneously and on demand, and it'll look really good. So what you're seeing is this vertical integration, which goes from content creation to content distribution. And AT&T is vertically integrated. Comcast is basically vertically integrated. Verizon is not, right? And you're seeing a commoditization in this marketplace. So here's how I'm linking this to the Nokia Ericsson conversation. I think what the people are saying about 5G is it's more important if I had to spend my money now to create the content, to get my walled garden ecosystem, and to have that vertical integration than it is to have 10 times the speed if I don't have the content. And so I think that's why the carriers are saying, you know what, 4.5G is probably fine. Because at 1 gigabits per second, I can throw video to people, right? But at 4 gigabits per second without content, it doesn't matter, right? And so I'm not saying that the Internet of Things isn't coming. And I'm not saying that we don't need higher speed and it's not going to be transformative. But I think the speed at which it gets here is being suspect by the equipment vendors that are selling the 5G, that it might be a few years off before it actually sells. So it's almost being priced as a long upgrade cycle as opposed to a short wave. And I think part of it is what's happening to their customers. And their customers are basically saying content's more important, and that's what they're talking about investing in. That's why you're seeing Verizon going out there and saying, to be honest with you, the two companies that are probably going to have the most play out of this are going to be Disney and Comcast, right? Comcast, because Verizon's already in a partnership with Comcast to basically be an MVNO and be the back-end Wi-Fi cellular. What they don't have is they don't have Comcast infrastructure in terms of wireline, okay? And so that's where they can put that together as a business. That's what's going to be appealing to the analysts. The other thing is Disney. You know what Disney doesn't have? Distribution. They don't have the end-to-end distribution that Comcast and AT&T does. So to be honest with you, if I had to choose, those would be the top two. I would put CBS at third. But CBS has content. It's probably not as powerful as the Disney content, particularly with the Avengers and Star Wars franchise. So I think that's why there's some, envy here by Verizon, because it's a much lower margin business here. And as I said, I think the walled content excites them about the way we're going to be doing stuff. So long story short, as you work through the chain, I think this is what's impacting companies like Nokia and Ericsson, is that one, there's competition, two, they're being somewhat deprioritized, and three, I think that this is the bear scenario playing out of a longer cycle. Now, if I'm wrong, and what I described as a story, the bull scenario would be what? What would the bull scenario be in contrast to what everything I just said? There's your bear. What's the bull? Yeah.
5G actually does catch on faster.
Yep.
And then they do see some positive growth in the short term. So as opposed to the long term layout, they get a short wave and they somehow produce content to match.
That's right.
That wave.
And if you believe that to come true, then for Ericsson, you'd rate them a buy. So that would be your bull. and you'd be more likely to be on the buy side of Ericsson because Ericsson's not priced for that short-term growth, and Ericsson's priced for tougher margins. So that's when I said do the bull and the bear, that's why I linked on Monday to how fast 5G shows up, because what we also know is this industry is kind of feast or famine based on carrier demands and carrier technologies. And so right now, I would just say the stock prices are probably showing more of a bearish scenario here as opposed to the bullish scenario, right? I'm not saying we're right or wrong either way, because in this article, Lowell McAdams does say we're going to do 5G network expansion. But I'm telling you, who's he going to buy this equipment from? Which then leads to the next thing, which is, are these cloud-based competitors and other types of ways of doing, expansion, such as Comcast expanding through Wi-Fi as opposed to Comcast expanding through cell equipment, is that what's going to be driving some of this? So is it they're going to do 5G, but they're going to do it in a different way than they did 4G? And does that also affect companies like Ericsson and Nokia? Yeah.
Does the fact that Ericsson and Nokia have patents to some of this technology that they're not priced in?
Well, I mean, I think the patents matter, but as I said, at the end of the day, if the growth isn't there, how much money are they going to make licensing patents if people aren't actually buying your equipment? So yes, I think these companies are all about patents, and most likely, if anybody tries to do anything similar, they will be sued. But again, it means that there eventually has to be the equipment to have the patent attached to it. And so at the high end, that's why I go back to the revenue growth. Unless they're licensing this out to a bunch of other people that are growing fast, and we didn't do on the of the major other companies, but when we did the EIC on Monday, nobody mentioned like here's the next fast growing superstar that everybody's looking at. Like these are the two of the biggest players in the world that sell this equipment, and Nokia just bought Alcatel-Lucent to become an even more dominant player in this space. So I say that that's possible, but I think less probable. Okay. So again, I'm not saying that patents are good and patents are protections, competitive advantage, but what I needed to do is I need to grow. At some point, I need to figure out where the next level of growth is. And right now, the market's not pricing these companies as if there's going to be a lot of growth. And I'm just saying, to me, I just go back to why I started this conversation. When we talked about the EIC and we talked about all this opportunity that everybody says, Internet of Things, virtual reality, whatever, connected devices, wearable devices, whatever you want to call it, all this stuff is going to be powered by quote unquote 5G. But you look at the 5G carriers and they're not having a lot of growth. So there's a disconnect somewhere in all of this. So it needs to eventually be reconciled. And as I said, I think the disconnect, if I had to explain it, is what I'm calling the 4.5G. Is the existing carriers are going to try and monetize what they have before they put the next big thing on there. Because I don't think you're going to pay much more for the 4.5G versus the 5. As a consumer, you're not going to know much of a difference. Now, they're going to market it to you as if it's a difference. But nonetheless, I think that's what's starting to happen in the marketplace. And it'll be a few more years out before these companies do it. So it's a longer cycle. But nonetheless, that's where predicting the future becomes interesting. And that's why we wanted to talk about it. So here's one other interesting thing I'll say. When we did the valuations of these two companies, and we came up today with a G of, back to Excel, we came up with a G for Ericsson of approximately 1.8%. When we did Nokia, assuming about a 32.5% tax rate, which was company guided in the midpoint, relatively low growth using these margins. G of 4.4. So if we came up with a G above 4% for Nokia, which you should have had somewhere, my guess is along those lines, assuming that they got to an estimated ROIC that was a little bit higher than Ericsson's, primarily because the EBITDA margins are going to be higher at Nokia than they were at Ericsson, then what does this really tell you about what the market thinks about these two companies? Nokia has double the G of Ericsson. Why? Why might they have double the G of Ericsson? Yeah.
Like I said before, the majority of Ericsson's business is kind of on the decline at 75% versus Nokia was, I think, was 56% of the business. So I feel like they're going to grow better because they don't have as much as a loss on that side, I guess.
Okay. Now, I heard all 4 presentations on Monday, so I don't know exactly what's said in this class, having trouble keeping them straight, but they're pretty similar themes. What else is true about why did Nokia buy Alcatel-Lucent? What did you guys say about that? What was the benefit of Alcatel-Lucent to Nokia?
Cost savings.
One was cost savings. What else was the benefit? I don't know if it came up in this section or not. Yeah.
They diversified product line.
Yeah, that Alcatel-Lucent actually had different things besides the cell phone network communication, so that gave them a little bit more diversity. And at the same time, Nokia also bought who? Mentioned this on Monday as well. They didn't just buy Alcatel-Lucent. Who else did they buy? Last year, 2016. Withings. All right, that's a move into what's called the Internet of Things. So if you look at Nokia, I have a colleague who uses the word productive paranoia. And she says, if you're a CEO, you have to be productively paranoid. And so her difference is you can't just be crazy or you're just paranoid, but you have to be productively paranoid. And here's what I mean by that, which is think about Nokia and what they went through. They owned the smartphone, the headset business to retail. Like they had the market. And then within a matter of years, they lost it all. All right. So they were dominant in a market and their market went away. So think about this. They're dominant now in the back end hardware. All right. So do you want to just stick to that one market? Because if we don't see growth and we see the carriers moving away to this, then it's like a nightmare. It's just getting worse because I'm just repeating what I've been through before. So if you really think about the two strategies, I think Nokia is being productively paranoid and saying, look, we got to diversify. Because it's not saying we don't want to ride waves, but here's the point. What if this wave doesn't rise as like we think it is? What if this wave is actually starting to crash because other technologies are starting to displace us, whether it's cloud or other things? And so by the way, if 5G takes off, then we need to be in some of those markets. And so what I'm saying is that's the strategy they've communicated to Wall Street. And when you look at the Gs, I think both companies are expected to grow slow in the next few years, just because, as you said, most of their business is still network communications to cell phone carriers. It's a little less at Nokia, but if nothing else, they have gotten out of this market in the long term, and Ericsson has not. So I think that's where you're seeing the difference in Gs. I think that's why the market's saying Nokia, a little better position for the long run, so we'll give them a higher G long term. Ericsson, not as much. Right? And I think that's the difference in the valuation. That's the difference in the margins. That's the difference in the multiples. That's the difference in the Gs. Questions about how I'm making those assumptions? Because that's why I think these as is, particularly when you do a couple of different ones, because this is how we can compare and contrast the industry, because we see two companies with two different strategies. I'm not saying Nokia's strategy is the right strategy, because they might get into a lot of things that either fizzle or they don't know how to do, because suddenly Nokia is competing with a whole different set of competitors than a company like Ericsson. Now you're dealing with Google. Now you're dealing with Apple, right? Now you're dealing with Samsung. You're dealing with companies that know how to do this Internet of Things and are probably much further down the path than you ever are. And they're in consumer-facing businesses, and Nokia is not right now. Nokia is in the back end. And when you go to the customer, it's a completely different market. So all I'm saying is that just because they're in the market doesn't guarantee success, but I do think that that's probably why they have a higher G. Okay, questions about any of this? All right, so here's my other comment to you. None of this says it's going to play true. This is what I mean by enhanced DIC. This is what I mean by talking about real bulls and bears. This is what I mean by using the multiples to help with the conversation. Okay, this is what I mean by doing that industry super tree. So I get a sense across the industry how different peers look and what they might be doing. So when you do your group projects, I am pushing you much harder than I have in previous semesters of taking this class, right? Because one of the criticisms that Smith has gotten is that we turn out people that know how to plug and chug, but we don't turn out people who know how to think, right? And I'm taking that seriously because I think you have to do the math. And I don't want to say that I'm not going to grade you because if you don't do the math right, you're going to lose points. You got to do the math. But now that you've done the math, can you put together the bigger picture? That's hard to do, but it's a very important skill set. Right? And so that's what I'm saying. We heard the EIC on Monday. We see the data here. We kind of backed into some numbers. Hey, this conflicts. I got to reconcile, and I got to explain the reconciliation. I can't just say these numbers don't add up and this doesn't make sense. I got to go further than that, and I got to think about what could be causing that. Same thing. I got to understand that the ROIC for these businesses are fundamentally different in the future than what they are today, because Nokia just went through an acquisition which drove up their costs, and they're about to lay off a bunch of people and change the cost structure, which is going to give them structurally higher margins. But they're getting higher margins without a lot of growth. And then they're making nascent bets into these marketplaces. That probably explains why they have a higher G than Ericsson does, because Ericsson doesn't have that. By the way, if I'm an investment banker, I might actually go to Ericsson with this exact story. This is how investment bankers sometimes come up with their ideas, because what they'll say is, hey, Ericsson, everybody else in your industry is diversifying into these marketplaces. You're not. Have you really thought about what the consequences are to your business if you don't diversify? And by the way, here's the companies I think you should buy. Because my guess is the conversation by Verizon's CEO, a CEO like Verizon doesn't accidentally say, I think I wouldn't mind if Comcast or Disney bought me. Like, that was planned, right? And that was a signal to the marketplace and to those companies about probably a lot of work that was done at the board level, done by consultants before that comment was made, right? You just don't see a CEO in that level make that comment just sort of matter-of-factly. That was a very, very planned statement that happened yesterday to strategically position a different thinking about Verizon in the future. So I'm just telling you, we could have figured that out before Verizon figured that out, based on what Comcast was doing, if we're following Comcast, and what AT&T is doing, and now how that's working, and it's working less for Verizon, right? And so that's what I'm saying. By putting together these industry pictures can be very useful. So to short circuit this, when you do your group projects, you're going to have 15 minutes, okay, to basically go through your PowerPoint, right? You can't cover everything in 15 minutes. You got to cover the basics. But I want you to tell me what's important. So what industry are we doing in this section again? Auto. So here's the thing. We just talked about what's happening with this upgrade cycle for these equipment manufacturers. Well, here's what I really want to know. What's the auto industry going to look like in 5 to 10 years? Am I going to be buying cars? Am I going to be sharing cars? Am I going to be driving a self-driving car? Am I going to be driving a gasoline vehicle, an electric vehicle? Like, they're about to go through a huge disruption. Am I going to go to a dealership to buy a car? Or am I going to order a car online? And is it going to be sold to me like a Tesla? Like, what is going to happen to some of these companies? And because when you talk about EIC, like, that's what the EIC is really all about. And how is it going to affect my automotive company? And is my automotive company well positioned to do well in this marketplace? Because that's what's going to be behind the buy, sell, and the hold recommendation that you eventually give. Okay, so what I'm hoping for is in 2 weeks, when you guys do your presentations, I'm going to learn a lot about automobiles, what's going on, what are the risks, what are the futures, how are they embracing it. And I hope it's not just a conversation that says the beta of Ford is X, the 5 forces are so generic that I could apply this to any industry, but here's how they are. I don't think they're going to change. Here's the spread's going to look the same in 5 years. Let's move on to the next section, right? And I'm not saying that you don't have to do that, but I'd like you to go a little further. And that's where I'm pushing you in this market. So you can't go further unless you've done that. Okay, and as I said, you got to do that in your presentations. But I hope that we all learn a lot about what the potential future of automotives are, what the scenarios are, what we think the likelihood of the scenarios are, how that's going to impact our companies, whether the markets fully put that into the prices of our companies, and whether there's really opportunities here based on that. Like, that would hopefully be where we get to. That's what I'd like to see more of in your papers and in your PowerPoint. I will put up an announcement sometime later this week, which lists in detail the minimum requirements, okay? But I don't want you to just check the box and read me a bunch of numbers, right? So this is where I challenge you. And you got to figure out how to do it efficiently. Because like I said, you don't have 30 minutes or 60 minutes to do this. You're going to have 15 minutes to do this. And I don't want you to write a 50-page paper because I don't want to grade it, right? So I don't want the papers to be more than about 10 or 12 pages because I got to read these things. And so I'd like to focus on more of the important stuff. So do the basics, do the analysis. That's what I want you to do on your projects. That's why I'm giving you a little bit of extra time. And we've gotten a lot of practice. Questions about any of this? All right, so our last graded assignment is Costco. We'll cover that in class on Monday. So I did move the assignment date till Monday. So we'll talk about Costco and Walmart and Target in terms of the multiples. We cover that section. and then the rest of the semester is just focusing on your group projects. Okay? Have a great weekend. See you on Monday.